Everybody, and welcome to another episode of the Capital Gains Tax Solutions Podcast, also streamed on Expert CRE Secrets Podcast, where we believe most high net worth individuals and those who help them, they struggle clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy such as the deferred sales trust is an amazing way for you to exit highly appreciated assets, cryptocurrency businesses, defer millions of dollars of capital gains tax, and so you can create and preserve more wealth. My name is Brett Swartz, and each and every episode, I'm joined by some of the best real estate, financial, wealth, and business minds in the world, where they share their ideas, deal stories, and inspiration. So together we make complex tax deferral strategies simple and passive income plans achievable. Hey, I'm excited about our next guest. She's out of the great state of Texas, and she has a passion for helping people that are worried about having enough money to retire on and figuring out ways to build wealth, particularly oil and gas, which we'll be talking about here, and having challenges with different capital gains taxes when it comes to exiting. In particular, though, today we're going to be talking about the investor's dilemma with underperforming sponsors. Please welcome to the show with me, Courtney Moeller. Courtney, how are we doing?
I am amazing. And man, you talk fast. I'm impressed with how quickly you're able to go. But no, I'm excited to be here. Thank you.
Yeah, thank you so much too. For our listeners getting to know you for the first time, would you give us a little bit more about your story and your current focus?
Yeah, sure. So I'm originally from West Texas. My dad was a petroleum engineer. My brother drilled oil. My uncle, they're all in the oil field company area. So I wanted to get into syndication several years ago, thought I was going to syndicate multifamily and other real estate assets, and figured out that the tax advantages of oil and gas pair very well with most people's wealth strategies. They're trying to figure out ways to, minimize W-2 taxes, capital gains. And so I'm a passive investor. I put deals together, but oil and gas is a hard space to get into, and to get into it with good, reliable people. So that's what I try to bring those opportunities.
I absolutely love it. You're going to fit in really well with our podcast here and our listeners. Before we dive into the investor's dilemma with underperforming sponsors, and maybe also tie in some stuff with oil and gas and capital gains tax deferral, I want to take one other step back. Courtney, I believe we've all been given certain gifts in this life, and these gifts have been given to us to be a blessing and help to others. I'm curious, what would you feel like is your superpower or gift, one or two of them, strengths, and what are they, and how does that help how you help and bless people today?
Yeah, I think one of my great strengths is really just providing really good service to people. I think that service is lacking across the board, especially when COVID came in. It kind of lowered the bar on service standards across the board. And I think people really, I build relationships. Of course, I want to help people do things, but I want to build that relationship. I don't want to just meet you and get to know you. Like, I want to get to know you and figure out what your strategies are and how I can help. All of my people have my phone number. I'm still typing out regular emails to everybody. So I do use some of those other services, but I think really diving in and getting to know people and just providing another level of service is really, really important. And I pride myself on being able to do that.
Perfect. And by the way, you can learn more about Courtney Moeller by going to CourtneyMoeller.com. That's spelled MOELLER.com, CourtneyMoeller.com. So Courtney, let's dive right into the topic at hand, which is the investor's dilemma with underperforming sponsors. So Courtney, what's the number one secret to either solving this dilemma, but maybe even want to define what the dilemma is first, then we'll talk about solving it.
Well, there's been a huge problem. And, I've been kind of sitting on the sidelines, especially in the multifamily asset class for a couple of years now, because here in that, 2019, 2020, 2021, I feel like there's a lot of these groups that are just pumping out all of these multifamily syndicators. And a lot of them are newer to the space. They haven't gone through downturns. They didn't go through 2008, and everybody looked like a genius. It didn't matter what you did. Assets were appreciating so fast that everybody was making money and everything was amazing. So now that we are seeing, interest rates have gone up so fast, and not just interest rates, but insurance prices have gone up, taxes have gone up, and we are seeing properties fall into foreclosure left and right. And so really now I've seen a lot of money is sitting on the sidelines because everybody's really scared. They're either getting capital calls, these assets aren't paying, and now they're losing assets, which is an awful position to be in. So we're really seeing who who knew how to weather this, who knew how to endure it, who is stepping up and, taking the swings for their investors, who is going to bat for them, who is going out and finding the resolutions and the solutions to what is going to fix this. So that's what I've really been paying attention to over the course of this probably last year or so, and I continue to watch very, very carefully. And so it's a mess, but we're seeing that separation between who knew what they were doing and who didn't.
Yeah, it really feels like what Warren Buffett says, right? When the tide goes out, you see who's been skinny dipping. Right.
Yes,
And
yes.
and unfortunately, it's happening right now. And we actually believe 2024 will be the best buying opportunity for real estate that we've
Well,
seen in 10 years.
Warren Buffett always also said, buy when there's blood in the streets. And that's exactly what we're seeing right now. So even though there has been all of this kind of scare and turmoil and everything going on, and now everybody's sitting on the sidelines, this is exactly when you want to be a buyer. This is exactly when you move in. And it doesn't matter what asset class it is, whether it's real estate, oil and gas, Bitcoin, it doesn't matter. When everybody else is scared and sitting on the sidelines and moving out, that's when you want to jump in. When everybody's talking about it and everybody's so excited and you're hearing about it from your freaking Uber driver, that's when it's time to sell and sit and wait for this opportunity that we're seeing right this minute.
Absolutely. We're talking with Courtney Moeller with CourtneyMoeller.com. That's CourtneyMoeller.com. So Courtney, let's continue on this topic here, right? So it's the dilemma with underperforming sponsors. So what are some creative solutions at this point? We've defined the problem and the challenge, but I mean, I guess even maybe it's preventative solutions beforehand that people could have done or should have done, and maybe are, feeling a little bit like they've lost at this point.
That's a really good question, and I wish I could sit here and say, "Hey, here are all of the answers," gift wrapped into a little package. But I think there's a lot that goes into this as to how you could have prevented that. Gosh, you know, I think finding out how long people have been in the space and what their track record is really important. I go in and partner with people that haven't been doing things for 2 or 3 years. They've been doing this for 20 years, and they've gone through the hard times. And I think even just finding out what those struggles are that they've gone through and how they navigated it, and what they did for their investors during that time frame. So I know some people that are struggling. They're really, really great, syndicators and asset owners. They are struggling with these interest rates and things, but they've gotten very creative on figuring out that solution and how they're going to fix things for their investors and, weather these storms of the interest rates and everything else. So I think asking those questions, how are you navigating what's going on now? How have you navigated past challenges? And how did you treat your investors during that time period? How did that trickle down to investors? We have a Bitcoin mining fund, and during Texas, it was really, really hot this last summer, and we had our devices shut off for, gosh, like 6 months during the daytime because of the heat. And so during that time frame, we didn't take management fees. There were a lot of things that we did to make sure that, nothing translated over into our investors. And I think those are the kinds of things that you have to look at. What are people doing? How are they getting creative? And how are they focusing on the solutions?
That makes perfect sense, right? It's asking the right questions, but it also is asking, like, what are you doing now to take some accountability and to try to align with the investors. Investments are definitely risk, right, that are involved, and that's a part of it. But how are they, as the general partners, as the ones that are running the deal, aligning with their investors in a way like such as stopping management fees? That makes a ton of sense. So what else should we cover on this investor's dilemma with underperforming sponsors? Anything else that you want to cover on this, or opportunities here, or any other thoughts before we can shift into some oil and gas?
Yeah, the only thing I would say is, just because somebody might be going through a difficult time with an asset, that's not a total indicator of the, asset manager as a whole. Because I know really, really good syndicators and asset managers that have amazing track records that are going through some tough times. So I think it's just maybe a matter of coming up with those great questions and really digging into the history and, like I said, how they're navigating it.
Okay, excellent. Well, then let's dive right into also what you focus on, which it sounds like oil and gas and different investments like that. So, what have you found the best ways to defer or mitigate taxes as it pertains to oil and gas investments? And how are those oil and gas investments performed on average the past 5 years?
Yeah, nope, that's such a great question. And oil and gas is really tricky. So if you want to offset any kind of income, you need a working interest. The tricky part of this is the people that have are offering working interests like ConocoPhillips and these bigger companies, they're not looking for private capital. And so, but that's if you're going to drill, that's who you want to drill with. If they come across issues like breaking a drill bit or hit problems with, the types of ground they're hitting, caliche and things like that, they have processes and kind of that Harvard level of equipment and geologists and everything to navigate it and break through it and get through quickly and not have downtime or pretty minimal downtime. But like I said, they're not looking for private capital. So that's that tricky part. And there's a lot of smaller companies out there, but really knowing what their track record is and how they deal with those difficult things. I'm seeing so many people from the real estate world step into oil and gas, and I am getting calls and emails weekly like, hey, I'm looking at doing this deal. Can you help me sit down and take a look at it? Because all of these syndicators are wanting to get into that space, but they're not even sure how to vet it. And I've seen a lot of things come across my desk here recently that are not good deals that people need to stay away from, and it's very unfortunate. And so we have found a way to kind of back end our way into these deals with these bigger oil and gas companies. So we only drill with ConocoPhillips and Continental and Anschutz. We just did a deal with Anschutz in November that we closed out. And the great thing about that, we paid a lot more for the lease when we acquired it, but the wells were already drilled. So we were sidestepping some of the, downtime and delays and things that you can go with that. But everything came online actually before we even closed. So our production is where we expected it to be. And I'm excited because my investors are going to end up with a third of their investment back on this first check. We got division orders about 3 weeks ago. So I guess the trade-off on that is because we paid so much more for the lease costs, we lowered a little bit of the depreciation you're going to get on the front end. But like I said, we eliminated a lot of the risk through it. And that's a really good give and take, I think, in my mind. So, and that depreciation, one thing I would like to point out, if you're vetting an oil and gas deal, that depreciation comes from the drilling costs, the stuff that offsets your W-2 income and your capital gains. So whatever cost they're going to spend on actually drilling those wells is where that's going to come from. Like we did a $5 million raise, 4 million of that went to drilling costs, which means we were able to offer 80% in depreciation. So I don't think a lot of people understand where that depreciation comes from because I've seen those costs not work out in offerings out there. So take a look at what they're putting into the drilling costs. The other really cool thing about it is any income that's comes from the production of those wells gets an automatic depletion allowance. So you're only going to pay taxes on 85% of that income for the life of that production, which is really awesome. So always take a look at track record. If somebody hasn't been doing this for a long time, and if they don't have deep pockets, I don't know that I would get involved. I would just be very, very careful. I'm seeing a lot of smaller companies that are out doing some stuff that looks really cool. The problem is they don't have the deep pockets. So if they hit a problem or they hit an issue, they're coming back to the investors to come up with the money to fix that stuff. So it's tricky. There's a lot of great opportunity out there. You just have to be very careful.
All right. That's awesome. So let's dive maybe to like a live example. Let's imagine I'm selling, $10 million of Bitcoin and I have a very low basis and or commercial real estate with no basis left or business, no basis left. And I'm like, Courtney, okay, I'm interested in oil and gas. If I give you 10 million today into the oil and gas, I had, let's say 40%, tax, the liability is about 4 million, right? So I put the 10 million to oil and gas. What does that look like as far as, the 4 million of tax, how is that treated or how is that deferred or how is that offset with the oil and gas investment A? And then B, what would be my average return, with some of these bigger companies that you're working with on that 10 million?
Yeah, sure. So obviously, if you're, offsetting W-2 income and capital gains, they look just a little bit differently. And I will just say that, I'm not a tax attorney, I'm not a CPA, so you need to refer to the legal people for this. But generally, let's see, and I'm going to take a smaller example. So let's say you have $500,000 a year in income, which means we're going to call it the 37% tax bracket, which is about $185,000 liability. If you put $100,000 in, and let's say we're at an 85% deduction, you're going to get an $85,000 deduction, which means you're lowering your taxable income from 500,000 down to 415. So that translates into roughly about a $32,000 deduction. But then obviously you're going to have the income as well. So, gosh, and it really varies. Oil and gas, the income is completely opposite of real estate. You're going to get a lot more of your income back in that first few years, and then it slowly goes down over time. We don't have exit strategies, so we're not selling anything in 5 years. We want to get that monthly income until those wells aren't producing anymore. And so like generally we expect to get about 100% of our return back in that first year, with a 200% in that 2 years, and roughly 80% of the overall return, which is usually a 3 to 4x in that, gosh, 4 years or so. So really high at first, and then it just tailors down. And like I said, we will keep those wells running until they're not profitable, and then we'll cap them off and be done.
Okay, got it. I think I caught that, some of that, and the return. So if someone gave you, let's maybe make it even simple. Someone gives you $1,000,000. You're saying the first you can take that million and return in cash flow $3 to $4 million in the 3 to 4 years. Is that what you're saying?
Yeah, now obviously every single investment's going to be different. So oil and gas, just like real estate, operators and location matter. So you always want to take a look at the geological reports for those wells and what they are expecting them to produce, because they're all over the map. I know people that are out, reinvigorating wells right now, and they're producing, 50 barrels a well, or 50 barrels of oil per day. And then you've got some, like a lot of our wells that we're working on right now are 1,000, barrels per day. So it varies, and it depends on where you are, but you want to make sure you're drilling in a great location. So we do generally try not to get into anything that's not going to return the initial investment back within that first 12 to 18 months. That's what we always look for.
Okay, awesome. Let's shift into the biggest frustration with the 1031 exchange. 1031 exchanges can be a big frustration for people, but I'm curious, what would you say you find for yourself or for your clients that you work with, the biggest frustration when it comes to the 1031 exchange?
Well, there's a lot that goes into it, and there's a lot of different ways to do that. And you can actually 1031 into oil and gas. I've actually never processed that on my own. I was just talking to my partner the other day, because it keeps coming up more and more, especially as I've got, some of my investors have, some of these bigger exits coming up. And so a lot of people don't realize you can 1031 real estate into oil and gas, but you can. We don't do it on smaller numbers. Because there's so much more involved and so much more paperwork and everything else. We do it on bigger numbers, generally not anything under $500,000. But there's a lot of ways you can do that. And this is definitely where a really good strategist or a CPA or somebody where you can sit down and say, okay, I feel like this is kind of where we see a lot of people with issues. They don't really have a strategy. They're just kind of spraying stuff out there and hoping that something sticks and it's going to work. But I think thinking ahead and having those conversations with the right people and figuring out what that right strategy is going to be is the way to do it.
Excellent. Okay, great. So that being said, we're running out of time. Are you ready for the lightning round?
Okay, I'm ready.
All right. Knowing what you know now, if you could go back to your 25-year-old self, what's the one golden nugget make sure you tell yourself to do?
Oh my gosh, I would have started buying real estate a long time ago. I've got kids this age, and I keep telling them we're starting infinite banking policies and all kinds of other things. I wish that I had the financial education growing up that I have now.
Excellent. Question number 2, what's the number one book you've recommended or gifted most in the past year?
Oh, The Gap and the Gain is one of my favorite books. When you focus on the positive things and the solutions, it changes everything about what you're working on and what you're doing.
Love it. Question number 3, what are you most curious about right now?
Oh, I am digging into new asset classes that I haven't seen anywhere else, like marinas and other things that are unique that haven't gone through the years of corporate hand changing that multifamily and other things have.
Excellent. Next question. Death tax, right? This is something that oftentimes gets kind of missed with 1031s or oil and gas because that has to do with mostly capital gains tax. But that death tax is about 40% on the total net worth of someone at the end of their life above certain exclusion amounts. So what's been like the biggest way that you found to eliminate that death tax?
Yes, that actually kind of circles back to infinite banking. I've really been doing a deeper dive into this because obviously, there's ways that you can buy whole life insurance. I never realized this, but this is where banks keep their money. This is how all of, the Rockefellers and all of these bigger names are keeping their money and transferring it to their heirs tax free. So I can't have a fully educated conversation on it just yet, but I'm getting there, and there are some really great ways of doing that.
Yeah, absolutely. And by the way, we do have one way too as well. It's called the deferred sales trust. It allows you to plus, it's a 2.0 version, remove assets upon a sale of something. You sell something outside of your taxable estate, eliminating that death tax if properly executed and set up. Whereas we found that life insurance can offset because it's tax-free money, but it doesn't actually eliminate the equity from the root cause. You just use the money to pay off the death tax, right?
Right.
So that's just a little nuance. If people want to learn more about that, you go to capitalgainstaxsolutions.com. Next question is this. Number one leadership quote or theme that you strive to live by?
Oh, so actually in my email signature, I have a quote from Zig Ziglar that says, the chief cause of failure and unhappiness is giving up what you want most for what you want now.
Love that. Love some Zig. Second to last question. What are you most curious about?
Oh, this comes back to that. I am looking into other asset classes and really looking at what are the smartest places to place money now, and who are the right people to place it with.
Fantastic. And last question, Courtney, after all your success, helping all the people you've helped, how do you best stay centered in your values, and how do you stay encouraged to charge forward to reach even higher heights?
Oh, you know what? Staying true to your values is, I tell you what, this is another story for another time, but honesty and integrity are more important to me than anything else. And coming from a place of abundance. And when I come across people, if they don't meet that, I'm out. And I listen to my gut, and I stay true to it.
I love it, Courtney. And I want to thank you for being on the show. I want to thank you for sharing tons of wisdom with us on investors' dilemma for underperforming assets, oil and gas, capital gains tax options. As well, I want to encourage you. I want to thank you for being on the show, but also encourage you to keep using the service to others and to build great relationships, help more people, create and preserve more wealth, have some more freedom in their life, leave a legacy with their finances. For our listeners who want to get in touch with you, what is the best place for them to find you?
Yeah, you can. I'm on LinkedIn. You can definitely, my website, CourtneyMoeller.com, is a great way to get a hold of me. And you can email me at Courtney@CourtneyMoeller.com.
Awesome. Thank you, Courtney, for being on the show. I also want to thank our listeners for listening to an episode of the Capital Gains Tax Solutions podcast. As always, we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy such as the deferred sales trust, or getting with someone like Courtney Moeller and doing some oil and gas investing to offset some tax, maybe some infinite banking, right? For offsetting state tax. These are different strategies. And like Courtney talked about today, having a strategy, having a vision is so important. And then finding the tool or the strategy that's going to help you execute on that is the next most important step. And so go take some action today. Go to capitalgainstaxsolutions.com to connect with me, or find Courtney Moeller by going to CourtneyMoeller.com. That being said, everybody have a great rest of your day.